what kind of guidelines you have that makes you differ from A and B side? Like, do you guys still need all the income documents and stuff when you are looking for a strong file that fits your portfolio?
So we don't debt service deal, so we don't calculate GDS, TDS. We just need common sense underwriting.
Why should clients choose private banks over A and B? What would be the different situation where borrowers would need a C solution, private solution than A or B?
They don't have enough time to get it, right? So they just need a quick closing, right? We can close a deal in 2 to 5 days.
If we talk about the commercial sides, what are the different type of properties you like to see and fund?
We'd be looking at some stuff that's more industrial buildings, right? So we would want something that's $2 million to $25 million.
So let me ask you $1 million question. Based on your analysis, where do you think market is heading in next, in a short term, next 1 to 2 years, and then long term in 5 to 10 years?
I do think that there's opportunity, challenges and opportunity. The challenges are going to be, of course, in the condo market. There's still going to be some further challenges, just given the amount of supply that's out there.
How closely does the lenders follow the real estate market?
We have a team, we have our risk team, we have our credit team that's always monitoring trends, and that's where you'll see the different changes in risk appetite, loan to values.
Unfiltered Podcast with Supreet is a go-to podcast for Canadians looking to learn and grow. Today among us, we have our VP of Vault Capital, Naresh Tucker. This podcast is not only good for people who are in the mortgage industry or who are realtors, but it is good for the borrowers as well. If you are looking for a mortgage, if you may get stuck last minute, and you need a solution, and you need trustworthy lenders, and you want to know what things you could be asked last minute to get your mortgage done, then this is the podcast for you. Without further ado, I would like to welcome Naresh Tucker.
Thank you very much for having me. Appreciate it.
Our pleasure. Naresh, in few words, we would like to first find out about your journey in Canada, how you managed to get to RVP position in Vault Capital. I know you have like lots of experience, 20 plus years in this industry.
About 20 years.
Yeah. So if you can tell us about your journey.
Yeah, absolutely. So I started, grew up in Sarnia, Ontario, went to school at University of Western, did business. While I was there, my brother was he was also in the industry. He was working as an underwriter at ING Bank. And so during, I think it was my second or third year, he wanted to live up in Toronto, work at the bank with me. I never thought I actually wanted to work at the bank. I wasn't really sure. So I did that for a couple summers, lived with him, actually really enjoyed it. After I was done school, at that time, I loved sports, I loved business. I thought I wanted to do something in sports business. So I did a separate degree in that. But all the while, I was still working at the bank. And believe it or not, after a year of doing sports business and working in the bank, I decided I still wanted to stay at the bank. So that's what I did. I stayed at ING, did some treasury there. I like to go around, meet people on the team, get signatures on funding reports. So that's when I really developed like a little bit of flair for sales. So I wanted to get into sales, which is what I did. I went to AGF Trust, which eventually got bought by B2B Bank. So I was there for about 10 total years. Worked my way up. I was actually a BDM for a couple of years out in Alberta. Moved back. Worked for Haventree Bank for about a year and a half as a BDM there. And then for the last 5 years, 5.5 years now, I've been at Vault as an RVP of sales. So that's kind of been my journey. Worked my way up, but I've always wanted to be in that banking, although I had a little detour there with the sports because that's a big passion of mine.
Seems like you have a lot of experience in different type of banks, right? ING, you talked about B2B, Haventree, and now Vault Capital. Help us understand what is Vault Capital and what type of bank it is, because in a nutshell, people have heard about there are A banks, B banks, C banks, right? So help us understand, what does Vault Capital fall into the category, and what is the best fit of clients for you guys?
So I think that to clarify too, in the industry, there's your A banks, which are your bricks and mortar kind of banks. There's your mortgage finance companies that are just like A lenders, but they don't have a branch presence. So these are your A type of banks where you're going to get your best rates and terms and service. Then there's alternative lenders that are out there, like the Equitable Bank, Home Capital, Community Trust. There's a number of them that are out there, right? And then there comes the private lenders. And in the private space, it's a wide group. There's individual private lenders as well as institutional private lenders. We're more on that institutional side where we are actually set up as a mutual fund trust, similar to a MIC with a different little bit of regulation on that, but that's kind of where we fit. And where I see ourselves as not necessarily as private, we're kind of that in between your B as well as your private. So we call ourselves more near B. That's kind of where we fit in the space. And I think to clarify too, for the borrowers that are out there too, just because you get placed with an alternative lender or with a private lender doesn't mean you're B, you're second tier. You shouldn't be qualified as an A client, right? You can still be a great client, but you might need a short-term solution. That's why you choose an alternative lender. Maybe that's why you choose a private lender, right? So don't get confused. Don't feel bad because you're in that position, because a lot of people who are very good clients, creditworthy and strong income, that's where they go for a solution.
And what kind of guidelines you have that makes you differ from A and B side? Like, do you guys still need all the income documents and stuff when you are looking for a strong file that fits your portfolio? Yeah,
absolutely. So we don't debt service deals. So we don't calculate GDS, TDS. We just need common sense underwriting, right? So what we ask for is we want decent credit profiles, typically 600 plus. And we do ask for 3 months bank statements, but just to see that the client can afford their payment, right? We're not a loan to own type of lender. So we still want a paying customer. So we do want to see their bank statements just for the last 3 months, see if they're paying their existing mortgage and see if they have some money coming to their account that they can make their new mortgage payment with fault. But that's essentially it. It's very common sense. If someone's bank statements are a little bit lighter, then what we could ask for are some investment statements. We can maybe make the mortgage partially prepaid, right? But without going into deep in the weeds on that, there's ways for us to make it make sense, right? We're just asking a few more questions, getting additional documents from you if need be.
As long as the deal makes sense. Yeah. Like if the client is asking for maybe the mortgage of 1.5 million, right? And their mortgage payment is going to be way high. You need to see how they're going to make the monthly payments, right?
Yeah, we want to see that how they're going to be able to make the payment, use a common sense approach around that. But again, we're in that phase where, because we're in that near B kind of phase, you don't want to be in this private mortgage, regardless of how good it is, right? The rates, the service and everything. You don't want to be here for a long, long time. You want to use this as a Band-Aid solution before you transition to either an alternative lender or an A lender, or to sell and exit out of the mortgage, right? So think of us as a Band-Aid solution for a short term, but one that offers great service, great terms, and flexibility. So that's where we kind of fit in that space.
Why should clients choose private banks over A and B? What would be the different situation where borrowers would need a C solution, private solution, than A or B?
Yeah, so there's a few solutions where we get those deals. Sometimes it's at the last second, a deal falls apart at a bank branch. You know what, the income didn't qualify or down payment wasn't acceptable. For whatever reason, the deal falls apart. Now they need a short-term fix to close their mortgage. They might be able to get an alternative deal, but they don't have enough time to get it, right? So they just need a quick closing, right? We can close a deal in 2 to 5 days, right? So we have that ability if you know what we need and you process things quickly on your side. A lot of the time, otherwise, where it's not just a deal falling apart, it could be a client has multiple properties or a property that's up for sale that hasn't sold yet, but you have bought another property. So you're kind of in between two properties. So we can create a bridge solution on those ones. And in general, we have the ability to help clients who have multiple properties, right? So we don't have a restriction on the amount of properties a client can own. We don't necessarily have a dollar cap, right? So we have flexibilities that way. Especially when there are a lot more guidelines and restrictions in the marketplace on rentals, right? So it's becoming a little bit more difficult to finance those on the institutional side, so we can help fill that gap.
If in general, what I have seen is, at least for my sake, one of the big reason why I use private lenders is if my clients are stuck last minute, right? Or if somebody comes to me last minute, hey, I already have my file with the TD or RBC, CIBC, and I'm not hearing back from the mortgage agent. Can you help me, right?
Yeah.
Or they might need a backup solution just in case if they need something last minute, they need to have a mortgage commitment in place, right? So just for their safety net, it always helped them, for us to go an extra mile for our clients and have that safety net in case they need it, right?
That's right. They should have come to Team Boja first, right?
Yeah. So what are the different kind of mortgage products that you guys offer within the Vault Capital?
Yeah. So in the private lending space, there are quite a bit of products, right? There's second mortgages, there's construction mortgages, there's first mortgages. There's a lot of different types of mortgages. What we've decided to do at Vault is do one thing and lean right into it, right? So what we've done really well is position ourselves as a near B first mortgage lender, right? So that's what we want to be known for at Vault and be the best at it in this industry, right? So when that deal just misses that B side, we want to be your first call, and we want to be able to offer the best service pricing on that private side for that, right? So we've decided to focus in on one versus offering a little bit of everything, right? So we do offer that. We have a separate division for commercial lending, so we can help people with their larger commercial files, right? So we have that ability too, but from the residential side purely, we're looking for those stronger first mortgages.
If we talk about the commercial sides, what are the different type of properties you like to see and fund?
Yeah. So on the commercial side, there's so many different types of deals, right? There's land deals, there's mixed use, individual condo units. At Vault, I would defer to our specialists on that side, but typically we'd be looking at multifamily, multi-res. We'd be looking at some stuff that's more industrial buildings, right? So we would want something that's 2 million to 25 million typically on that side of the business. So a little bit more larger scale, not the small individual kind of units.
And is it the same kind of concept where you would like to give them the term of 3 months to 12 months period, and then they can eventually move their file over to the other side?
Yeah, that's the same idea, right? So we want to be known as that transitionary lender. You're not coming here for a long time. You come here for a short time and to create that exit, right? Just to bridge you that gap. Yeah.
What is one thing that you, as working for Vault Capital, take pride at, that our company is good at doing this for our borrowers, for our clients, right? Or for the community?
Absolutely, yeah. So I can sleep at night knowing what our terms are, right? So in the private side, in the broker world, a lot of people say, if the private lenders doesn't get you on the way in, they'll get you on the way out, right? And that means that if the fees and rates look so good on the way in, they're probably back-end loaded, right? Or vice versa. You'll see the a la carte kind of fees. You'll see so many different fees associated with a loan that, you know what, once you add those up, your total cost of borrowing is so out of whack, right? So at Vault, what we've been known for is, one, we want to be a good service. We want to be good pricing, but we want to have transparent terms, right? We want to give you a flexible solution. So we're not going to be the one that hammers you if you're 1 day late on a payout or anything like that. We'll work with you. As long as you're communicating with us, we'll communicate with you and offer you a good solution, right? So we want to make you as a broker look good for sending your deal to Vault versus another alternative lender.
No, I think I 100% agree with you. We can sleep well at night as well when the client is placed with the Vault Capital, because I know some of the lenders, they like to be heavy on the discharge side, and then when the client is with the Vault Capital, we know there's only going to be a small fee as a discharge fee, and then eventually it's disclosed properly upfront to the client, so the client is they are well informed, let's put it that way. Right, what they're going to be charged towards the exit, right?
Yeah, there's fees associated with our mortgages too, but we're not the ones that we bury things in the fine print. We want to be transparent about it. Whereas we find in the marketplace, that's not always the case, right? Some people offer you shiny rate, fee, but then in the fine print, they'll ticky-tack you, right? And those are the things that'll kill the client, right? Or the long term, right? Once it comes to payout, they're really not getting that amount that they are expecting to, right? It's a lot higher than that.
In our industry, we always talk about the fake documents and all. We, especially when it comes to the A side and B side, right? I think regulator is also trying to make an effort of bringing in the CRA income verification tool. I don't know when it'll happen, but there's a lot of buzz about it, right, in the industry. What's your take on that, on the fake documents and all? And do you guys see that as well on your end?
Yeah, so the income verification tools, long overdue. I think we'd love to see that CRA verification tool be accessible to in the broker industry as well. I think that'd be great. It's always going to be there, unfortunately. We'd like to see it all cleaned up, but with some of those tools, it will be. But it's just taking a little bit longer than for us to see that. Being on my side of the business, we don't see a whole lot of the fake documents because if you're coming to a private lender, you got to be pretty nuts to be sending in fake documents to us, right? All we need is 3 months bank statements. If you're giving us 3 months fake bank statements, you're really desperate. What you really should be going to is a broker who knows what the lender's policy guidelines are, right? If your bank statements aren't strong, there might be another private lender for you. Just don't come to us, right? So most people are smart enough to realize that and not send their deal to us if their bank statements are weak, right? Because that's one requirement that we do have at our bank, right? So we don't see a lot of that. Some of the red flags sometimes that we do see are, some of the private purchases, some people trying to, it's more on the property side of things versus just the income side of things, right? People trying to inflate names, price, the
value of
values, the properties, right? You see last minute amendments of people being removed from a deal, right? Where there's an issue with that client, right? That's why they fell apart at the bank, right? But they don't tell you that, right? So we have to be a little bit more slick with what we see and the stuff that we uncover. But really, there shouldn't be much in the way of fraud when it comes to doing a private loan, right? When it comes to income. I would hope not anyways. It's sad that we have seen it in the past, but we shouldn't really, right? If someone knows our guidelines.
So how's the market from the private lender perspective? Were you guys more busy back in the day when the housing market was booming a lot in 2020 to 2022-ish kind of a period? And what's the market more like nowadays from 2023 to 2025 when everybody's in a crunch? They are desperate to get mortgages and banks are getting tight on their guidelines as well.
Yeah, in those years at 21, 22, it was crazy busy. I don't think we've hit that levels of volume as yet since then. But that's not to say that there aren't deals, right? So especially right now, as you mentioned, there's been a lot of tightening in the space and the A space, the bank space. So there needs to be solutions for some of those clients. It might not necessarily be a vault deal when it comes to a second mortgage. You know what? That's not something that we really do, but we are seeing a number of inquiries. Some may fit, some don't, but the number of inquiries is high, just not as much funding as it has in the past because the resale market hasn't been as hot. That's all.
Let's talk about job seekers, right? People who are maybe looking to get into the private banks. What are the different career paths within Vault Capital itself or in a private bank?
Yeah, absolutely. So there's a number of different positions you can jump into, whether it be with Vault, whether it be at a B lender, private lender, anywhere in that space. So there's, if you're just getting your feet wet, a mortgage administration role is good to be in, right? You learn the back end of the bank.
That's more like an entry level position.
More of an entry, I would say, but you learn a lot of the back end servicing of a mortgage. And then from there, the good thing is in this industry is there's always those peaks and troughs, right? So during those troughs, which we kind of think we're in right now, right? And like a lower part of the market, as we go up, there's going to be a lot of opportunity for growth and movement. So you can move into other positions where it becomes fulfillment, underwriting. Then you can go into sales, right? Or credit management, risk, there's treasury. There's a lot of different options you can have. I would just say get your feet wet, right? If you want to be in this industry, whether it be with Vault, another lender, some lenders are hiring, some are not, right? Just get your feet wet somewhere, get some industry experience on your resume, and then you can start looking after at least a year or two, right? Get a little bit of banking experience in that side.
I was going to ask, like, the industry experience you're talking about, is it more like a bank or the person can be from the brokerage side as well or some kind of industry exposure?
Yeah, so at Vault, we don't necessarily just hire bankers, right? We've kind of been, I was one of the few that we hired as a banker, right? Sometimes we feel that bankers might not always have the best work ethic. When you look at some of the people on that side, right? It's we don't want people who are just going to be clock punchers, right? When times are busy, we want you to be able to work. When times are slow, you don't have to pretend to work, right? So we want you to be there to service people when they need to be serviced. But we have people from all kinds of walks of life, whether it be at a bank or whether it be on the real estate side, whether it be accounting, financial background. We have some people who are new to to Canada coming in to work with us as well too. So we have a number of people that have been working at Vault, and we are a larger organization now too. We've grown since when I started. I think it was employee number 13 or 14.
Oh, really?
Yeah, and now we have well over 40 people just on the Vault Capital side. So
nice.
Yeah,
How long have you been working for Vault?
Since 2020.
2020.
Yeah,
okay,
so it was an interesting time, of course. So
Yeah.
when I started, it was just 2 months starting, just after training, getting started, getting feet on the street. Then COVID happened.
Then the COVID happened.
And then we didn't know whether we were going to be lending, not lending, or no one knew what was going to happen. And then little did we know that it was going to be busier than anything on the other side of it, right? But no, it was an interesting time to be starting, but I'm glad I joined the right organization during that time because they offer great support.
Okay. No, amazing. Naresh, let's talk about the interest rates. How does your interest rate as a Vault Capital stack up to the other private lenders? What do you see general trend?
Yeah, so I think you have to think of rate as well as fee altogether. Right? I think it's important to think of total cost of borrowing once you add in all of the other fees, rates, and all the rest of it. But I think once you add all those up, I think we're going to be rated the best, if not close to the best, in this private lending space. And we do ask for a stronger borrower. So we want like the 600 plus credit. We do ask for 3 months bank statements. But in turn for that, we offer you a great solution where it comes with great terms as well as pricing. Right? So the overall yield and the overall cost of borrowing with Vault is one of the lowest in the industry. So I think for most brokers, what they typically do is say, you know what, I got a deal that doesn't fit that A side. I have a deal that doesn't fit that B side, or my timing is too constrained. So let me call Vault first. If it doesn't fit with Vault, that's when I'll explore my other options, right? So we want to be that first call, and I think we've earned that with a lot of our broker partners.
I think in general, what I have seen is with the B side, if the B side is nowadays offering 5.5, and if Vault can offer 5.99, then in some cases it does make sense to have them go with the Vault.
Yeah,
less hassle, less documentation, faster solution. And in regards to the fee as well, if the B side, they're charging 1%, right? On the Vault, if the credit is good, if the income bank statements are solid, and if we can fit them in the lower fee kind of space, then why not, right?
It's not far off, the difference between the two. And really, some people have likened us to a private with B lender vibes, right? People might say that we're a B lender on steroids, right? B without the BS, right? We've heard of a few different ways people have kind of positioned ourselves, but that's kind of where we fit in the market. So we're really not far off from that B side.
Yeah. Well, I'll share my own story with you. I think one of the scenario where I actually used for my own file, Vault Capital, was when I closed a property and I was looking to exit within like 2-3 months as soon as I sell the property, right? For me, I was able to convince my partner to go with the private lender because if we go with the A or B side, on the exit, we might get a hefty fee, right?
That's right.
And with the Vault Capital, we had a surety that, okay, we're going for the open mortgage. We can exit anytime with a 30-day notice. And that was kind of, point for us that, okay, we might pay 1 or 2% fee up front, but there's $0 at the exit, right?
That's right.
Or very minimum. So overall, it was making sense for us to go for the private side rather than going for A and B and going through the hassle of all the documentation, right? So it's more about, I think it depends upon broker to broker as well, how you change the narrative, right? How you see overall everything is fitted into the picture, right?
Yeah.
So,
and that goes back to saying where I mentioned at the start, right? Just because you're in a private mortgage doesn't mean you're a bad client.
Yeah,
it could be mean for a great borrower.
100%.
You just need a flexible solution, right?
Yeah.
So that's where people will still come to places like us just for that short-term solution because it makes sense because it's an in and out mortgage, right?
Yeah.
Right. So that's where it can be very beneficial.
I think one of the other case where I had a client and they're like very good bank statements and everything. They're all mortgages is with the A side, and they were in need of funds. They came to me. They were acquiring a commercial property. They're like, we need funds tomorrow, right? In 2 days, can you arrange something? And they need like $2-3 million. And I'm like, what do you have? And they're like, okay, these are the properties that are sitting, free and clear. What can you do within 2 days that you have? I'm like, okay, let's take money from this side and then put it into the commercial side.
That's right.
And when can you return? They can return in 3 months. Okay, then the private is the best solution rather than trying to look for a or B side last minute. So it all depends what kind of client it is, how early they need funds, as opposed to trying to think about, okay, it's gonna I have to collect all these documents, submit it to the bank, do all the checks, underwriter getting back to us, which would take
it can take some time.
It takes some time, depending upon the portfolio.
Of course.
Of course. Naresh, as a person, what do you like to do in your free time when you're not wearing your Vault Capital hat?
Yeah, so my time is very busy these days. I'm married with 2 young kids. So my mornings are spent with them. So I have a son who's 4 years old, daughter who's 2.5. So we're always playing in the morning, drop them off at daycare in the evenings, spending time with them, my wife, hanging out. So lots of time with the kids and the family. That's the most important thing. Outside of the family time, if I need a little breather, it's either maybe exercise, golfing. I love sports. So anything involving around sports, whether it be watching or playing, I love it. So those are some of the hobbies, just to kind of catch my breath, get a little break. So those are some of the things I like doing. No,
I definitely see all the events that Vault Capitals get engaged in, and they invite brokers as well. So it's always good to network with the lenders and brokers, right? So it's amazing.
That's a fun part of the job.
That's a fun part of the job.
Honestly, we love doing meetings, interaction, closing deals, but also getting outside of the regular day-to-day office job and being outside, maybe having a dinner together, breaking bread. I think it goes a long way, right? Getting to know someone personally, and I think that's very nice in this industry that we have that ability.
Yeah, no, it's amazing. What's your day like as a RVP sales for Vault Capital?
Yeah, so again, it starts with the kids. So that starts with the kids in the morning, and then come home, get ready, and we're off on the road. So I'm on the road about 4 days a week. One day, usually my home day, booking meetings, doing my administration, going out to meet our broker partners where they work, where they operate, make sure that we know what we're doing here at Vault, so that if their deal doesn't fit on that A or B side, that they're giving us that first call. And then beyond that, it's just staying responsive to our broker needs, right? We get a lot of deals that are coming in, and in this space, it's a fast-paced environment, right? So it's not a deal where, I missed a call from Spreet, I'll call him back tomorrow or call him back 2 days from now. No, it could be a deal that you have on your desk that's coming up to close in 2 days, 3 days. So we need to start working on it, right? So being accessible is very important to me. So that's something that I pride myself on, is responsiveness and service. And that's kind of won me trust in business over the years, right? So I think that's one big thing. Beyond going to do your meetings, it's being accessible and being responsive, right? So that's a big thing for me. Of course, in the evenings, because I am with the kids, I tell brokers too, that's my family time. I'm not going to compromise on that. If there is something that's urgent after hours, just send me a text. I'll get back to you afterwards, after they may be asleep or whatnot, or I'll send you a text response, or first thing the next morning, I'll get back to you, right? So I think just being responsive is very important. Then, of course, beyond the meetings and calls and emails, there's the events and stuff too, right? Especially when you look at trade show season, which is typically the spring, and then during the holiday season, it's quite busy too. But again, that's part of the fun of it.
I think that's very important. One thing I've seen is when it comes to responsiveness from private lenders, everyone is very responsive, right?
They have to be.
They have to be, because I think that's one big thing that we're selling to our clients, right? Being able to do the files within a quick turnaround, right? Absolutely. Whether it be 1 or 2 days or 3 days, but that's what make private space differ from A or B side, right?
It is. But you still have to be careful though too, right? There would be some private lenders that'll close a deal in 8 hours, right? They're not going to look at anything, but they won't give you the best terms either, right? So they'll say, you know what, I don't need an appraisal, I don't need these documents. It's some uncle who's lending the money. But once you uncover what that paperwork looks like in the terms, they're not very favorable, right? Or they might say 6 months into the mortgage, I want my money back. Go get this guy another solution. Then they're going to have to pay another fee, right? So it's important too, on the deals that you're doing on that private side, to make sure you know who your lender is, right? So know the lender, know the terms, and that's where you're going to lean on your broker, right? Lean on your broker, lean on guys like Supreet to know who those private lenders are and what deal fits for you, right? Because that's very important in this space, because there is a lot of, unfortunately, there's a lot of gouging. Right?
We have seen that. And that sometime as a broker, we get tricked by our clients as well. So that's why there needs to be different level of checks, right? We're
That's
doing
right.
our checks. Lender needs to do their own check,
100%.
right? To make sure, we know what we're doing when we're lending our funds, right?
That's right.
Yeah. In terms of AML, since last year, there's been a lot of talk about anti-money laundering and all. Regulator has been putting a lot of checks as well. Things have changed a lot for us. There's a very fast tool for the identity verification, and then there are checks to make sure that we're in compliant with AML.
Right.
How are things on your side, on the lender side?
Yeah. So we have to comply with that as well too, right? Like I know on the private space, there's a little bit less regulation and rules and guidelines, but when it comes to AML, we still have to abide by those rules too, right? So that's very important. I think it's a good thing. We have to do some of those similar checks. So you do your check, we do our checks. They have happened pretty fast, right? So I think initially, once they got implemented, was it January this year? I think it was, or around there. It was pretty new. We were all getting used to some of the tools, and maybe it was a little bit more time consuming at that point. But I think now, especially with the technology that there is out in the industry, it's made it more streamlined with how we kind of do it on our side. So I haven't really seen much of a hiccup on our side when it comes to processing times, and we are now doing those AML checks, which again is a good thing.
Anything that strikes your mind in terms of somebody failing the AML check, in terms of the down payment maybe, or the identity, or any one of scenario that you can come up with?
Haven't seen a ton of it. Honestly, I haven't seen a whole lot of fails on that side of thing. Because what normally happens is the broker's doing those checks beforehand anyways. Right? Because you're going to be doing your checks. So when it comes to us, we're doing similar checks anyways, maybe a little bit more detail, but by the time it already hits our desk, you've already done your background, right? Especially with our good broker partners that we work with. They know that we're going to need all that being taken care of. Or if there are any questions, we'll address it up front. You provide their ID up front. We do additional checks if need be, right? So usually our broker partners are up front with us on that kind of stuff. Yeah,
because at the end of the day, there is no point wasting our time, your time, right? And even when we are doing those checks, it costs us money as well, right?
It's a waste of time. If you're holding back information about a client past history or transgression, we find out that the last second before funding, well, we just created an unfortunate experience for the client. And number one, it was based on the client not telling you and you not telling us, right? But now we just waste a lot of time and money, right? Because that deal might have still fit somewhere else.
100%.
Right? Or it might have been a deal that no one needs to be doing, right? So at least we can know that up front. That's the most important thing, is transparency. And that's what we ask from our brokers, right? If we ask for the only income doc we need is bank statements, don't send those at the last second. Send those up front so we know how to structure the deal. Right? So transparency is the biggest thing for us.
100%. How closely does the lenders follow the real estate market? Any trends or guidelines you guys follow to see if you guys are going to be busy in next 6 months? Now is the time for breather. Do you guys do that sort of analysis on your end?
Constantly. So we have a team, we have our risk team, we have our credit team that's always monitoring trends. And that's where you'll see the different changes in risk appetite, loan to values. On our side, I think the loan to values would be your biggest gauge. If you start seeing lenders doing 85% first or 90% first, you would imagine it's going to be a very good market, right? Because that's what was happening 2-3 years ago. Right now, you're probably seeing loan to values shrink a little bit. That's because lenders are being a little bit more conservative because they're not sure where the bottom is, if we're close to it or right at it, right? So I think that's what you'll see. So we do always manage it, and you'll see it being translated into loan to values and risk appetite.
So let me ask you $1 million question. Based on your analysis, where do you think market is heading in next in a short term, next 1 to 2 years, and then long term in 5 to 10 years?
So not the views of Vault, just views of myself. So I do think that there's opportunity, right? So there's challenges and opportunity. The challenges are going to be, of course, in the condo market. There's still going to be some further challenges, just given the amount of supply that's out there, and some of the stagnation with the amount that's been sitting out on the marketplace. But I think there's opportunity when it comes to the resale market, when it comes to towns, semis, detached. I think there's an opportunity there. And I think there is going to be an area where we start to see a little bit more traction. As we were talking before the pod, we saw just driving around our own neighborhoods. We started to see more listings going up. We started to see sold signs on people's lawns. For a while there, about 3-4 months ago, you wouldn't see a single sign out there. even though that was spring market, you definitely wouldn't see a sold sign.
Yeah.
Right. So we're starting to see a little bit more about that now. It takes time for that data to get translated into the true reports that people view when looking at our economy. But I think there are some, signs of hope out there. And of course, we'll see where the rates go September and for the remainder of the year. Maybe there'll be some cuts that offer some additional relief and flexibility. But we'll wait to see on that. But I think we're starting to turn the corner a little bit.
Okay. No, right? That's a good sign too. And especially coming from somebody who is higher up and dealing with this on daily basis, looking at the data, analyzing the overall vision for the company, right? No, that's a good sign. Whenever there is a change in the interest rate for Bank of Canada, do you guys adjust your interest rates right away, or is there a time period where you guys need to analyze, how to move forward?
So we do view where the banks are going with the pricing. Our typical loans are variable with a floor. So sometimes we will pass it along to the borrower. Sometimes we can, sometimes we can't. Because our loans aren't your typical kind of adjustable rate mortgage where you're with a bank or a B lender, right? Some of our funds are raised through investors, right? So we have to promise a certain amount of return to that investor. We can't keep dropping to a point. If the Bank of Canada drops their rates by 2-3%, will we see privates in the 4% range again? I don't know. I probably doubt that at this phase. That did happen a couple of years ago, but I don't expect that to happen now, right? So at times we can, at times we can't.
It depends upon the market.
Yeah, it depends upon the market and what the expected rate of return is out there, right? Especially when you look at the GICs and return for the investors that we're offering, it has to be commensurate to the risk.
Any advice you would like to give, especially the investors out there who are looking to buy multiple properties, coming from a private lender side of things, like do they still need to make sure that they are qualified with the bank or all? What advice would you give them?
There's opportunity, right? When there's a down market, that comes with opportunity, right? With challenge comes opportunity. So there could be opportunities right now. I think you can get these deals financed with a private lender, maybe an alternative lender. I think the goal is to look at what is your long-term strategy, right? And what's going to be your exit plan? Because like I said, these are... with us, even though we might offer great rates, service, all the rest of it, you don't want to be stuck in these loans for long term. The goal would be moving to an institutional kind of a B or A lender, right? So think of your end game once you're doing it, but there is opportunity right now. Right? I think that's a great time to take advantage.
Do you see a lot of first-time home buyers coming to the private space?
It's not often. Usually the first-time home buyer, you wouldn't, like if you did the proper process, which is go to your mortgage broker first, then go to your real estate agent, you would know whether you're going to be able to qualify, right? You do your pre-qualification tool, right? Pre-approval, pre-qualify, and you know that there can be a fit which side, right? Your typical first-time buyer won't be choosing to get a private mortgage for doing their first home.
That's not ideal.
No, it's not ideal at all. It does happen, right? Usually it's the deals that happen with us are those ones that fall apart at the branch at the last second because they're trying to hide something, or their banker uncovered something, or non-disclosure, and then now they're coming to a private side scrambling for a 2-3 day funding deal. So it's not often, but once in a while we'll have it. Normally we have more sophisticated long-term kind of clients that are coming to us for fix and flips, in and out kind of a deal, right? So buy, sell, open terms, that kind of stuff.
Yeah. So most of the first-time home buyers, they usually are looking to close with 5 to 10% down payment. So in those cases, you guys need at least, in most of the times, you guys need at least 20% equity in the property, right?
Yeah.
So do you guys accept like gifted funds or what other solutions I think they can come up with?
So usually it is a matter of if they have family that's willing to offer support and financially give them a down payment, that's great, right? So we do need at least 20% down on any kind of purchase. So that's the number one solution. If they're lucky enough to have a parent who can offer that kind of money or family member. If they don't, one thing that we've done it's not necessarily for first-time buyers, or what we've done is do blanket mortgages, right? So it might be a situation where parents don't have cash in hand, but they have equity in their home. So what we've done in those situations is we can tag that property as a blanket charge and do a financing on the property that they're buying. And sometimes we might be able to get them even more than 80%, right? So we can get a little more creative with it depending on the amount of equity in that parent's home.
Yeah. Right? I think a similar solution can be applied when somebody's coming with a lower than 600 credit, right?
Yeah.
They can bring on a guarantor.
Yeah, guarantor, additional properties,
Additional
like that. The
property.
whole additional property thing is becoming very popular right now. I would only do, as a lender, we love having additional properties as security, but I wouldn't be offering them as a client if you didn't have a clear exit strategy, right? So we're seeing that a lot more often now when it comes to these new construction builder closings that are happening right now. Because a lot of those clients, if they bought after 2022, they might be lower when it comes to appraised value versus their purchase price. So they're looking for a solution. If they have additional funds on hand, or they have a family member who has money to give them funds to close that property, that's great. If they don't, then a lot of the time we are doing blanket solutions on those ones, right? So if they have another property, or if their family or parent has another property with some equity, there's a way for us to tag that and still be able to close their deal. We can do that under an open term. If their plan is to sell one of the properties within the year, then that creates an easy exit plan for those clients, right? So that's what we're doing a lot of these days.
I think with the private lenders, it's at the end of the day, it comes down to what is your exit plan at the end of the day.
Yeah, you have to think exit plan first, right? That whole saying, like, begin with the end in mind. You really do have to think about that when you're doing private. And of course, as a broker, that's very important when you're doing your KYCs with the client. Yeah. Because to close a deal, just to close a deal doesn't make any sense. Yeah. Right? You got to have that exit plan, or otherwise you're just going to be eating away at a client's equity, charging fees and all the rest of it. It doesn't make any good experience. It doesn't make sense.
It's actually part of our compliance to have the exit. Discuss that with the client and put it in the notes when we send the file over to you guys.
Yeah, the lender, we need to know it too, right? So
without the exit plan, I don't know what you're
doing. What are we doing? There's no real solution. You can say it's a solution, but it's really not, right? The solution is no solution without an exit.
100%. So what advice would you give to the mortgage broker, maybe who are already in relationship with you guys, or who are new to Vault? Anything you would like to tell them?
Yeah, do your research on your private lenders, right? So don't just say, my brokerage works with ABC private lender. Do your research to see what's out there, right? Because there could be different fits for different kind of clients, right? So see what's out there, check their terms, check their overall yield, check the cost of borrowing, right? Do your research on those. Work with your broker to find the right match, right? There's always going to be a list of private lenders that you can work with, but who you align yourself with matters to your client, right? And I would suggest for them, if you haven't heard about Vault, reach out to me, right? So
sometimes the first name that comes out to your list might not be the best fit for the client, right?
You have to find the alignment, right? It's great to find a yes for the client, but is there another solution for them, right? And that's the whole part of working with a mortgage broker, right? That's why you're not working at a bank,
100%.
Right? If you're at a bank, you sell one product, one solution, and if they say no, then what are you left with? Nothing. As a broker, your job is to know the lenders and solutions that are out there, and that's why people come to you. Is because you have that knowledge, right? Yeah. So don't be someone who's just an order taker on the broker side, because that doesn't make any sense.
100%.
Right? So work with a broker, and if you're not sure about that on your side as an agent, or you're a newer agent, align yourself with a team lead, right? And of course, on to be doing any kind of private lending, you have to be level 2. So typically, you are going to be a little bit more experienced, but if you're not, at least go out and learn.
100%. What are the different, I would say, common mistakes that you see mortgage brokers making when they send applications to you guys?
Yeah, so I just say withholding information, right? So be upfront. Tell me the good, the bad, the ugly on a deal. Have the bank statements up front, right? Don't wait for them to get it. Or if you had them, don't wait to send it over to us. Send it over upfront, right? So whether we know if it's a deal we can do, can't do, we can tell you right away. Or if it's a deal that we need to structure a certain way with making maybe the mortgage prepaid, we can do that, right? But don't withhold information. So just be upfront with what you have, and that's also why we can close deals quick. Because if you give us full information up front, we can close that deal quick.
Do you see private lenders taking advantage of the borrowers to some extent?
Unfortunately, it happens, yeah. There's always those out there in the marketplace that are taking advantage. You see a client who's desperate for money. They'll charge extra. The broker might charge extra, right? You see those clients get taken advantage of, and really that client's best option at that point was probably to sell the house. Right. So if people see that, they seek blood and seek money. That's not the way to do business long term, right? That's why we don't really get into that type of lending anyways. But we know that there are lenders out there that are doing that, right? Or like I said, those situations where someone does that bait and switch, they give you the low rate, the low fee, but once you're paying out the mortgage, it's a huge line of charges, right? That the client is facing, right? So it might not look like you're taking advantage of them at the start, but they are being taken advantage of once you look at the fine print. Right. So unfortunately it does happen. And that's where, again, you need to know who you're working with. So do your research.
I think to some extent, borrowers are at fault as well. When I can speak from the mortgage broker perspective, that we try to educate our clients that, you know, you're going to be in a trouble maybe 6 months down the road, 1 year down the road, but then they try to convince us, no, they don't want to sell the property. They people get emotionally attached to the property, right? Especially when they're actually living in the property, right? They feel somehow they will be able to manage. You know, the wife will get a job. My father is trying. We'll get money from India or overseas, right? So somehow they will get help, and they will be able to afford what they're not able to afford right now.
They might feel the embarrassment of the community that, you know what, I can't be selling this home. Where am I going to live, right? But really, you got to think long term about it.
Yeah,
right. Think short term, long term. You got to think rational about it, right? Why put yourself through that strain just for the image, right? Be in a comfortable spot financially. It might be a short term pain or discomfort from living in a smaller house for a little bit, but then you can always get back into it, right? Work with someone who has that strategy for you, can work with it and create that strategy for you.
So private lenders, from the institution perspective, they're obviously regulated. But do you feel there is a need for the industry overall to be more regulated? Just from the perspective that to make sure borrower are getting informed properly about the fees from the guidelines perspective, after charges, during the exit. And all.
I think the regulation is a good thing, right? When it comes to even the private side, right? Because even though we might be less regulated at the face of it, depending on where your capital sources are, it might be very regulated at that point, right? But in the end, I think it's very important for a client to have transparency, understand what they're getting into. So if there are more stricter rules about disclosure and having your fees set out, and the commitment, again, not buried in the fine print, I think that's very important. And I think that would be a great thing for this industry.
Are you seeing a lot of power of sales in terms of the properties that are that you guys have funded? Are you seeing a lot of power of sales? Those deals going into
that's the ugly part of the business, right? And it does happen. We do have to deal with that. I think the worst of it was back in 2023. So the clients who bought at that peak in 2022 at rock bottom rates,
the values dropped a lot.
Values dropped. A year later, their rates went up 4 or 5%, right? Whether it become a renewal or if they were in a variable, they had to make a huge payment difference, right? That's where there is the biggest challenge in the industry. But because now we're past that, there are still the odd case where you go through it, but a little bit less.
Does the lender get impacted by power of sale? And do you guys at that point lose money in some cases as well?
We can lose money. Absolutely. If there's a big drawdown in the equity, yes, you can lose money. But it's also time consuming and it's not a good...
It's a lot of overhead.
It's time consuming. It takes a lot of resources. And it's not it's a great experience for anyone involved, right? That's not the goal. You have to be ready and prepared to do it as a lender. But that's not the goal whenever you're getting into these kind of deals, right? Like I said, we're not that kind of loan to own. We're not trying to put a client in a tough position. We're not looking for a foreclosure or anything like that. We're just looking to in, out, get off to something better and create that easy solution and exit.
I think the goal is clean.
100%.
And out,
yeah,
right?
exactly.
No overhead, nothing, right? Be transparent about all the guidelines and everything, all fees, so that, you know, everyone is happy at the end of the day.
That's right. That's what we're looking for.
Oh, amazing. Any last piece of advice you would like to give to the mortgage brokers that are out there who are listening to you today?
Absolutely. Do your research. Like I said, we talked about it before, but do your research on the private lenders that you're working with, right? So if those deals don't fit that B side, who are you going to first? Who's your first phone call, right? Is it just someone who's going to say yes to every single private deal that you have? Or are you going through the list of your stronger kind of privates, your near B before you go to your true private? Always do your research. I think that's the most important thing. Get to know their terms, get to know their service, get to know their requirements. So once you have that nailed down, you might think that that person who says yes every single time is your easiest approval and easiest funded deal. But it might be that lender who says yes half the time, offers you a better rate, and it's still just as easy once you know their process, right? So I think getting to know your private lenders, having a conversation or meeting with the BDM goes a long, long way, right? So I would suggest getting to know your privates.
How can mortgage brokers connect with you?
Phone call, email, right? So we can put up the contact information and maybe in the show description. We can do that 100%. So call, email, text, whatever works. I'm accessible.
Amazing. Thank you, Naresh. It was a pleasure having you at our studio for this podcast.
Yeah, 100%. Thank you very much.
Thank
Appreciate
you.
it. All right, thanks.